Assalamualaikum, my name is NATASHA binti MOHAMAD RASHIDI with student ID 2022455176, and my partner, which is Siti FARLINY binti ZULKIFLY, with student ID 2022616478, will present about multiple questions from question 3 to question 7.
Okay, our team has 5 members, which is Muhammad Ashraf, Sheikh Ashraf Danial, Siti MERIAM FARLINY, and Siti SHUHADA binti SHAMSUL BAHRI.
Now, let's move forward to the question. According to subsection 1, it is about the registered firms and his client's money. A client's account could not be accepted or managed by a registered firm, such as a valuer, estate agent, or property managers firm, unless specific protections are in place to protect the client's money. Insurance must cover the firm's liabilities, like any possible use or misuse of these funds, to guarantee the security of the client's money. Clients are protected against financial risk caused by fraud, poor management, or registered firms' insolvency by this clause. Then, subsection 2 is about the guideline by the board. The Board of Valuers, Appraiser, Estate Agent, and Property Managers, which is BOVIA, has the authority to publish the guideline in order to properly carry out this regulation. These rules could regulate with the protocol, requirement, and terms for businesses managing client account and acquiring insurance, guaranteeing compliance, and safeguarding the general welfare. Now, let's turn to the purpose of client account. It's first, keeping and receiving clients' money. Clients' fund must be held in a separate client account, distinct from the company's operational fund, to prevent misuse, mismanagement, or credit claims during financial difficulties. A client account ensures the funds are secure, identifiable, and used only for their intended purpose. According to Rule 57, any client funds such as property deposit, rental collection, or professional fees must be placed into a dedicated client account. Firms act as trustees, ensuring the funds are protected from loss, theft, or misuse. Then, protect client money in trust. Client funds held in trust are not the firm's property and must be kept separate from operating finance to protect against fraud, misappropriation, or creditor claims. This segregation ensures the integrity of the trust relationship, offering clients confidence in the firm's financial practice. Firm must be maintain accountability and transparency by accurately documenting all transactions, allowing clear tracking of the funds' origin, use, and purpose. Client funds are managed strictly according to their instructions, such as completing transaction or covering authorized expense. Misuse of these funds and result in legal or regulatory penalties. Lastly, pre-authorized payment. Authorized payment involves using client's funds strictly with the client's explicit permission, ensuring compliance with their instruction and agreement. Firm must obtain clear, preferably written authorization before making any payments and document the details of accountability. Authorized payment typically cover transaction-related costs such as paying sellers, legal fees, or administrator's charges. Detailed records of payment, including purpose, recipient, amount, date, and client authorized, provide a transparent audit trail, ensuring accountability and safeguarding client funds. Next, the table highlights the key difference between Registered Appraiser (RA) and Registered Valuers (RV) under the Valuers, Appraiser, Estate Agent, and Property Managers Act 1981. Firstly, the titles were established at different times. The term appraiser was used before 1981, while valuer was introduced in 1981 under the Act. For section applicable, RAs operate under Section 19 and Section 20, which includes specific restrictions, while RV were under Section 19 only, allowing them more freedom. The scope of services also differs. RA can perform valuation and property management but are limited to certain locations and property values. In contrast, RV have a broader role, including valuation for financing, transaction, property transaction, and consultation. For restriction, RAs can only work in specific states and are limited to property values based on their experience. RV have no such limit. They can work in any state and access any property value. Lastly, there are differences in fees. RA pay a processing fee of 50 ringgit and registration fee of 75 ringgit. while RV pays RM75 for processing and RM150 for registration. Then, the differences between a proprietary valuer and a registered valuer, which is PV and RV. Firstly, the legal section under which they are regulated difference. A PV falls under section 17A, while a RV is regulated under section 19. This indicates that a PV is still in the process of meeting the requirement to become fully registered, whereas an RV has completed the necessary criteria and is recognized as fully registered. In terms of registration status, a PV is still in the process of achieving fully registration, while a RV has already obtained fully registration. This distinction highlights that PV are in a supervised phase of their career, whereas RV has the autonomy to operate independently. The scope of services also set them apart. PV are limited to their practice and must work under supervision within a firm that is registered with the board. On the other hand, RV have the ability to practice independently without any restriction, reflecting their higher level of expertise and experience. Regarding requirement, a PV must work in a firm registered with the board as part of their training process. In contrast, to become a RV, one must complete 4 valuable examination as stated in Rule 33 and pass the test of professional competence. Additionally, there are differences in the form of application and fees. PV apply using Form A1 while RV use Form A. The fees for only each category also different, with PV paying a processing fee of RM50 and registration fee of RM100, whereas RV pay a slightly higher processing fee of RM75 and registration fee of RM150. The difference between a broker, real estate negotiator (REN) and a registered estate agent (REA) can be explained clearly based on key factors. Firstly, in terms of registration status, brokers are not registered with the board, whereas both REN and REA must be registered with the board. This means REN and REA are officially recognized, while brokers operate without formal registration. When it comes to supervision, brokers and REA do not require supervision. However, REN must work under the supervision of REA. This ensures REN receives proper guidance while carrying out their responsibilities. Regarding qualification, there is no specific qualification required for a broker. On the other hand, a REN needs to obtain a certificate, while REA must complete examination and gain 2 years of working experience to qualify. This highlights the higher level of expertise and training required for REAs. Finally, the ability to open a firm is another key difference. Both brokers and REN are not allowed to open their own firm, while REA has the right to open and operate their own real estate firm, as they meet the qualification and professional requirements.
Next, for question 5 is about the importance of professional indemnity insurance. First of all, what is professional indemnity insurance? It frequently referred to as errors and omission insurance, which is a form of liability coverage that protects professionals like consultants, accountants, lawyers, and other service providers from monetary loss brought about allegation of mistakes, omission, or negligence in the performance of their professional duties. With the help of financing for legal protection, settlement, and judgment, this kind of insurance protects professionals and ensure that they may keep on offering their service without worrying about going bankrupt. So, the importance of professional indemnity insurance for valuation firms is to protect against claims which arising from mistakes, omission, or carelessness that may cause financial loss to client. Such claim can lead to expensive legal defense and compensations, threatening the firm's financial stabilities. Professional indemnity insurance cover defense costs and damage, ensuring the firms remain solvent and operational. For instance, if a firm overestimates a property's values, resulting in client loss, professional indemnity insurance help mitigate the financial impact by covering damage. This protection maintains trust in the profession and safeguard the firm's reputation and operations. The next one is compliance with regulatory requirements. Malaysia valuation firms are required to maintain professional indemnity insurance to comply with regulatory standards that set by the Board of Valuer, Appraiser, Estate Management and Property Manager, which is BOVAP. This ensures firms have the financial resources to handle claims from error or carelessness, protect clients' interests and upholding professional accountability. Failure to comply may result in penalties, license suspension or revocation. To renew a practicing license, firm must demonstrate sufficient professional indemnity insurance coverage to compensate for misleading valuation, ensuring operational legitimacy, adhering to professional standard and the safeguarding to client trust. Professional indemnity insurance also helps valuation firms maintain their reputation and customer confidence by addressing financial risk caused by professional errors. Client trust firms with professional indemnity insurance because it ensures their rights are protected and compensation is available without compromising the firm's financial stability. Professional indemnity insurance safeguards the company's reputation by handling complaints professionally and effectively, demonstrating accountability and professionalism. This approach reassures clients, enhances the firm's reputation, and positions business as trustworthy and reliable in a competitive market, making it essential for attracting and retaining clients. Then, for the example of loss covered under the professional indemnity insurance is document loss or damage that refer to the expenses involved in recovering or replacing important client documents that are destroyed, lost, or damaged while in the professional firm's management. For instance, the cost of replacing or restoring original property title documents or valuation reports may be covered by the insurance coverage if they are accidentally lost or destroyed. Next loss is negligence, that known as mistakes, error of judgment, or a failure to exercise the standard of care anticipated in professional service that cause the client to suffer a financial loss. For instance, the insurance will pay for the claim and related expenses if a valuation firm present a client with an incorrect property valuation because of mistakes or insufficient investigation. Legal defense costs, where a valuation firm's legal defense costs under professional indemnity insurance cover the cost of defending against claims whether or not these claims are genuine. For instance, the insurance ensures the firm's financial stability during lawsuits by covering legal bills, court charge and other related expenses in the event that a client sues the firm for claims errors in a valuation report. And the last one is inaccurate or misleading advice, where it appears when a valuation firm causes a customer financial loss as a result of inaccurate or uncertain professional advice, where professional indemnity insurance can compensate for the claim and related legal fees caused by, for instance, a firm recommending an investment in a property based on an overstated market value, resulting in the client overspending and suffering loss. For question 6, types of misconduct and ethics. According to Part IX from Rules Act 242, it demonstrates that professionals have to carry out their responsibilities with honesty, dedication, and compliance to the law and industry regulation. False or misleading valuation report, fraud, conflicts of interest, and action that harm the reputation of the profession are all considered misconduct. In addition to avoiding illegal practice, including undercutting fees and disclosing any personal interest in deals, registered valuers are required to protect clients' confidentiality. BOVAP has the authority to take disciplinary action for any infraction of this ethical standard, which may include suspension or removal from the register. So, what is the type of misconduct and ethics for registered valuer and appraiser? The type of misconduct and ethics for registered valuers and appraiser is registered valuers or appraiser acting as an estate agent, which based on Rule 64 under Part IX of the Rules Act 242 that prohibits a registered valuer or appraiser from acting as both an estate agent and a valuer for the same property in a single transaction to avoid conflicts of interest and ensure impartiality. This regulation also applies to firms, preventing different valuers from the same company from working on the same transaction to maintain professional independence, fairness, and transparency. The rule safeguards the integrity of real estate service by eliminating bias and ensuring objective outcomes. Rule 65 Act 242 is personal interest to be disclosed, which emphasizes that registered valuer or appraiser must disclose any personal interest, business connection or relationship that could affect their professional judgment, ensuring transparency, trust and ethical service. Valuers must inform client about any conflicts of interest such as relationship with developer, contractors or financial beneficiaries to allow clients to make informed decision. By being open and honest, valuers uphold professional integrity, avoid biased outcomes and ensure their actions serve the client's best interest, particularly in property management or awarding contracts. This guarantees fairness, transparency and confidence in the valuer's service. Rule 66 under Act 242 requires registered valuer or appraiser to charge fees according to the official fee schedule in the 7th schedule, with any higher fees needing written approval from the board. This regulation prevents overcharging, ensure transparency and promote fairness in professional laws. For instance, if a valuer believes a complex property evaluation requires a higher fee, they must justify it and obtain the board's consent. By maintaining accountability and standardizing fees, this rule protects clients, upholds professional integrity and fosters confidence in the industry. Next, Rule 74 Act 242 is accuracy of statement, which prohibits registered valuers and appraisers from making false, misleading or incomplete statements regarding property valuation. Providing inaccurate information such as omitting evidence or structural damage or overestimate a property's value can mislead buyers or investors and result in legal violation. The rule emphasizes accuracy, honesty and transparency in valuation reports to ensure professional integrity, protects stakeholders' interests and maintain the dependability of appraisers' assessment. The last one is Rule 75, which is valuation reports, where it requires registered valuer and appraiser to provide informed, accurate and well-researched response when offering property valuation, ensuring they avoid casual or unverified estimates. Proper valuation involves through inspection, analysis of property details, market condition and comparable data to guarantee precious and dependable reports. If technical challenge arise, valuer must seek expert guidance like engineer or architects and include their finding in the report. Compliance with professional standards, including those set by the board, ensure report remain consistent, reliable and aligned with modern industry practice such as sustainability consideration and evolving guidelines. Last but not least is the process of disciplinary procedure involved by board where the first one is complaint. Complaint concerning the conduct of appraiser, registered valuer, estate agent and others shall be informed and submit to the board as stated in Rule 133A. The complaint has to refer the Complaint Investigation Committee in Rule 134. The second one is preliminary investigation, where according to Rule 134A, the Complaint Investigation Committee (CIC) shall inform the appraiser, registered valuer, estate agent and others that are related about time, data and place when the complaint was made against him. The Complaint Investigation Committee may call and examine witnesses or take any action if considered necessary and proper for obtaining further clarification regarding the complaint. On completion of the investigation, CIC must make a report to the board. Then, action of disciplinary board, where the registrar must schedule a meeting like set a date, time and place of the disciplinary board to review the report or investigate a complaint and ensure it is conveyed as soon as possible as stated in Rule 134C. Next, service of notice and document, which according to Rule 134D, a notice or document sent to a registered valuer, appraiser, estate agent or probationary professional at their last known principal business address as listed in the relevant registers is considered properly addressed and duly served. Then, appearance of disciplinary board, where the registered valuer, appraiser or estate agent has the right to respond to a complaint in person, through consult or in writing by filling a reply. They must submit a notice of intention to appear, a written reply to the charge or both within 21 days of receiving their complaint notice based on Rule 135. Next, decision of disciplinary board, where at the disciplinary board meeting, it may either dismiss the charge or take action under Section 24 Subsection 1 of the Act according to Rule 138. For the last one is result and effect, where according to Rule 141, the disciplinary board could cancel a person registration and their name is removed from the register, and they must return their certificate or authority to practice. They are no longer allowed to use any title suggesting they are registered. If they are suspended, they also cannot use such title during the suspension period. That's all from our group presentation. Thank you for taking the time to watch this video.